Hello and good afternoon. Warm welcome to everybody to our Dr. Hönle H1 fiscal year 24-25 earnings call. Before we proceed, one quick question to all the attendants. Is there anybody here who is not able to speak English? If that is the case, please feel free to use the chat box on the bottom of the screen and change the language so that we know that English is the prevalent language that you do speak. While you're considering this, I'm very excited to present today's representatives of the company, Dr. Markus Arendt, the CEO of Dr. Hönle, Robert Stark, who is the CFO of Dr. Hönle. Both of them will guide us through Dr. Hönle's H1 results today. Like every earnings call, this will also be followed by a Q&A session. Please enter the questions that you have into the chat box, and please make sure that you preface your question by your name and your company name so that we can qualify the question accordingly. Now, let me just quickly check if anybody has mentioned that they are non-German speakers. So far, this has not happened. I would suggest that we progress in German, unless, of course, Dr. Arendt or Mr. Stark, you want to continue in English, please feel free to do so. However, the audience presently seems to be German speaking. With that in mind, I'll hand it over to you, Dr. Arendt, Mr. Stark. The floor is yours.
Schönen guten Tag, liebe Zuhörerinnen und Zuhörer.
Oh, sorry, I just had one person stating that they are not able to speak German, so let's continue in English.
Good afternoon to the audience. Welcome to the 6-month half-year earnings call of Dr. Hönle Group. My name is Markus Arendt. I'm the CEO of the company, together with Robert Stark, the CFO of Dr. Hönle Group. We will guide you through the results of the past quarter and the first 6 months of our fiscal year, together with business highlights and an outlook for the company. You can see in a summary the results of the company in the first 6 months, starting October 2024 up to March 2025. We are looking back on a rather strong Q2, which is the period January to March 2025. Our sales in Q2 increased 20% compared to Q1 2024-2025 and 6% year-over-year compared to Q2 2023-2024. The sales in Q2 reached 25.8 million, up 4.4 million from the Q1 figure, totaling 47.2 million euros for the first 6 months, which is slightly shy of the results of the year before, mostly as a result of discontinuation of unprofitable product lines, namely the solar simulation business. Our EBITDA in Q2 2024-2025 rose up by 95%, reaching 2 million in Q2 2024-2025. Overall, within the first 6 months of this fiscal year, we achieved an EBITDA of 3 million euros, which is up 15% over the previous year's 6 months period. So with these numbers in mind, looking back at the first 6 months, looking in particularly back at the past 3 months, together with a strong backlog that we achieved, we do confirm our outlook for the fiscal year 2024-2025 in terms of revenue and also in terms of EBITDA profitability. We'll touch base on the numbers that we target to achieve in our last slide of this presentation. Let me guide you through some of the business highlights in the past quarter, Q2 2024-2025. The total business, which achieved 25.8 million euros revenue, is a strong, stable business under certainly geopolitical uncertainties. Touching base on our three business units, we see a considerably weak demand for our adhesives business outside of Asia, in particular driven by weaknesses of call-offs and projects in the automotive industry, as well as in the flexible electronics industry. The Asian business, however, for the adhesive systems is definitely stronger than in the year before. So this is something which we mainly see in North America and in Europe. For our business unit Curing, we see a growing business for industrial applications. So all our UV and drying solutions for industrial applications outside of the printing industry grew significantly, contributing to a solid business level in the first 6 months, whereas the printing industry showed a solid business line approximately on the level that we experienced the year before. Our third business unit, Disinfection, saw increased sales volumes in the past 6 months, mainly driven by applications for ballast water disinfection and actually food disinfection. Secondly, our restructuring and refocusing activities contributed to a stronger profitability of the company. First, we would like to mention that we transferred our activities in the field of the sun simulation, which was an unprofitable business line here, to an outside partner, meaning that actually the outside partner is continuing on our behalf to take care of the existing installed base of sun simulation systems. We continued the cost management focus inside the company, driving actually personnel costs as well as material and other costs with a strong focus, which resulted in an improved EBITDA result compared year over year. Thirdly, our business unit Adhesive Systems is under a new leadership since March 2025, and the new leadership is poised to steer the growth in this business unit over the years to come. Thirdly, some highlights from our new business activities. We are very proud to announce that we received the first order from a large semiconductor fab for our UV disinfection solution for ultra-pure water. We have several installations more out in the field at testing sites at large semiconductor fabs, and we are very confident that this application will contribute a significant portion to the UV disinfection business in the years to come. The business unit Curing started a cooperation with a worldwide leading hot melt supplier, developing tailored solutions of hot melt together with our Curing solutions to offer a customized and actually tailored solution into the market. And thirdly, actually in February 2025, we launched a high-precision UV measurement device called UV Scan Max that companies and customers can actually use to in situ measure the UV dose being transferred to their surface to enable an enhanced closed-loop process control for curing applications, which will allow them to improve their cost of ownership and the productivity of the solutions. I may now hand over to Robert Stark to guide you through the details of our revenue, EBITDA development, as well as the capital structure of the company. Robert.
Thank you, Markus, and good afternoon from my side, everyone, and thank you for joining us today. So let's take a look at the revenue and EBITDA margin development from the previous fiscal year throughout Q2 of our current fiscal year. As shown in the chart, revenue has remained relatively stable throughout the prior year, ranging by around 24 million euros, with a peak in revenue in Q4 of around 26.7 million euros. The fiscal year for us began softer in Q1 with the around 21 million euros, but we bounced back strongly in Q2, reaching 25.8 million. Very much in line with our expectations and our prior guidance we gave in Q1, the outlook for Q2. On the EBITDA margin side, we've seen some improvements. In the current fiscal year, we saw a slight dip to 5% in Q1, but rebounded back to 8% in Q2, again meeting our short-term margin targets in Q2. To summarize, revenue is stable throughout our global uncertainties. The EBITDA margin has rebounded, which is a signal that we are on track with our operational and financial priorities for the fiscal year, which we expect to continue going forward. Let's now turn to the performance of our three business units for the first half of our fiscal year 24-25. Starting with adhesive systems, like Markus Arendt already mentioned, sales came at 17.1 million, representing a decline of 8% year over year. Same EBITDA decreased significantly to 1.9 million, which makes up to 50% decline. Primary driver is here, as already mentioned, weakness in the automotive sector, weakness in the flexible electronics, a shift in our product mix with a higher portion of adhesive equipment systems, which has a lower margin than the adhesives itself. In addition, we made strategic investments into headcount and in R&D to lay the groundwork for the future growth, a decision aligned with our long-term roadmap. Moving to curing, this segment delivered stable revenues, same here, 17.1 million, only slightly down by 2% compared to the period last year. EBITDA result still negative at 0.6 million, but improved strongly by 72% compared to the period in the last year, thanks to effective cost-cutting measures that are now starting to show results. Within this segment, industrial applications are showing a higher momentum right now compared to the printing market. Our full-year profitability target is an EBITDA of 0 in the short term for this year. Finally, in disinfection, we recorded a strong performance. Sales rose by 7% to 13 million. EBITDA more than doubled to 1.7 million. This business currently exceeds our internal expectations, driven by strong demand in ballast water treatment, food industry, surface disinfection. We have a good reception both for our product portfolio and for the high level of technical and biological expertise which we bring to the table. To sum up, we are prioritizing to work focused on projects in adhesive systems, bring curing back on profitability, and use the disinfection momentum to realize further growth opportunities. Let me now walk through the key developments in our financial debt and cash flow situation. As of the end of this reporting period, our net financial debt remains stable of around 44 million euros. This primarily consists of long-term loans used for the financing of our corporate buildings. We continue to see a slightly declining trend here in line with our expectations and repayment plans. Looking at the cash flow, we were able to generate nearly 2 million euros in operating cash in the second quarter. This performance has more than compensated for the negative development we saw in the first quarter. Accumulated, we have an operating cash flow of around 1.2 million. However, we still have not fully unlocked our cash flow potential for the year. This is mainly due to two factors. First, we had some severance payments that affected the first half-year results. And second, the particularly strong month of March will only be reflected in our cash flow figures with a time lag. So we had an increase in our accounts receivable, and the cash flow will be generated operating in April and the further month. On the financing side, the repayment of loans and credit lines has led to a corresponding increase in the cash flow from financing activities of 1.7 million, and as expected, a decrease in cash and cash equivalents. Finally, our equity ratio remains solid and stable at 52%, which continues to provide us with a good resilient capital base moving and going forward. That's so far from my side, and I will hand back to Markus to give you our outlook for the full year.
Thank you, Robert. I would like to summarize our results for the first 6 months and provide an outlook based on our current situation and the market perception. We confirm the revenue guidance to achieve a revenue for the full company for the full year between 95 million and 105 million euros. We confirm the expected increase in our profitability, showing a higher EBITDA at the end of the full fiscal year compared to the previous year, which had resulted in an EBITDA of actually 5.5 million. Let us allow to make a statement on the impact of tariffs and the current geopolitical uncertainties and the impact on the Dr. Hönle Group. We see ourselves robustly positioned and only with a limited direct impact from the recent developments due to mainly two facts. First of all, we provide solution-based, typically customized offerings using UV and curing technologies for industrial customers, making us more resilient towards price competitiveness. More this solution and the targeted solution has a more important role than the sheer price itself. There's more value to our products. Secondly, the majority of our business is still in Europe. We generate around 70% of our business volume in Europe, and that goes hand in hand also with the supply chain, which is almost entirely based actually in Europe and is not coming from the United States. So therefore, the direct tariff impacts are limited actually to Hönle, and we do not see an immediate risk to our revenue and profitability. However, we stay certainly vigilant in the developments to come. And we also have to encounter, like any business player these days, that there is indirect effects from the tariffs discussion, creating uncertainties among our customers that reflects in deferred investment decisions and in a certain volatility also of exchange rates. We consider these to be indirect effects that may impact the business. Nevertheless, due to a solid backlog that we have, due to a strong momentum that we see in the disinfection industry, and in particular also for curing solutions for industrial applications, we confirm our guidance in terms of revenue and EBITDA. With that, we would like to conclude the presentation, and are, let me say, happy to answer your questions you may have. Thank you.
Thank you very much, and congratulations, gentlemen, on an excellent second quarter, i.e. first half, and I guess the share price itself and its performance already a lot as a testament to that. Now, I am looking for questions, and thus far we have not received any. So let's see, there you go. Here we start. Question number 1. Make this public. Comes from Malte Schaumann of Warburg Research. And he says the guidance midpoint implies similarly or slightly rising revenue levels in the third and fourth quarter. Does the current order backlog and project pipeline support such development?
Yes, it does. Actually, both the current order backlog as per end of March and the project pipeline, the weighted project pipeline with the profitabilities, indicates that we should achieve similar results in Q3 and Q4 as we have seen in Q2, thus making us confident that we can confirm the guidance in terms of revenue, actually, and profitability.
All right, thank you very much. Josef Scherer is asking, what are your figures for EBIT and net profit? I think we focused in on sales and EBITDA. Can you give us the lower figures in the P&L as well, and maybe comparables?
Sure. So our EBIT in the first year were around 300,000. In the previous year, where was the EBIT minus 100,000. The net income were in 24-25 half year minus 400 due to interests and tax payments, and the compared period was minus 700,000. So improvements on both levels of EBIT and net profit compared to the previous fiscal year.
All right. I'm waiting for additional questions at this point, but while we're waiting on questions, looking at your cost-cutting situation, are you done with those programs, or do you expect further impetus coming from these programs in the third and fourth quarter as well?
We are done with the programs. We start to see now from the past month or two onwards the full effect, the full cost effect on our books of the measures that we took, in particular in terms of the headcount. Nevertheless, we stay vigilant and cautious in terms of any other expenses, SG&A expenses, and we continue to actually work to continuously work on the material cost situation, which hopefully will contribute as we go forward. But in terms of HR activities, we are done, and they are now absorbed and should be fully reflected in the next quarter's result.
Correct.
Thank you. Once again, to all the people in attendance, if you want to ask a question, feel free to use the chat box, enter the question, and we will address it to management. Thank you. Quick question on the business split that you had alluded to earlier. Disinfection is doing extremely well. Curing is on the profitability side doing better, but still in the negative, reaching break even probably by year's end. Adhesive was down on revenues by 8%, if I recall the number correctly, and EBITDA down 50%. Was that decrease in EBITDA slowly driven by a contraction of the gross margin, or was there also some extraordinary costs that had an impact on this development?
I think so. First of all, it is one effect that the top line is missing. So we have no very big impacts on the gross margin. We had a shift in the gross margin regarding our product mix. So to remember, the adhesive systems is a combination of systems for curing the adhesive and the chemical itself. And the chemical has a very high margin because of the very low production costs and raw material costs. And on the other side, the equipment, I mean, it's a typical equipment business with high raw materials, a lot of production costs, and to sum up, the product mix and the missing top line were the effects that we had a very big decline in the EBITDA.
And as a quick follow-up question, the weakness in automotive and other end industries, customers in that regard, is that temporary? Do you expect that to recover in the short to medium term? What's your vision on that when it comes to top line guidance for this year, or even more importantly, maybe over the next couple of years?
Right, we expect that to recover. Bear in mind that the adhesives, when it comes to adhesives only, is a call-off revolving business. The adhesive itself is a consumable. So we expect that with automotive industry to recover from their decline that they experienced in the past quarters, that also our business volume will start to recover. We also expect we have some interesting projects in the pipeline, in particular also for the automotive industry, that got deferred or delayed by the current uncertainty in the entire automotive, including electromobility business. We see that. We expect that this will improve for us, at least in the midterm. Short term, we expect that the call-off levels will start to normalize again within the next couple of quarters.
Thank you. The next question comes from Malte Schaumann at Warburg Research, and it's regarding ultra pure water. How many customers are you currently in talks with, and how long is evaluation expected to last? What is the 2 to 3 year business opportunity of ultra pure water in semiconductor that you can see?
Right. We're currently in touch with a total of 6 semiconductor players, if you want. However, there's more than 6 fabs in which potentially our solution could be employed. Right now, we are expecting for this fiscal year, so I can mention also the sales volume of the first win in Q2 was around 50,000 euros. We expect for this fiscal year a revenue contribution of 200 to 300,000, meaning on average a win of 4 to 6 installations. You were asking about how long a typical period is that our solution is being tested. That lasts anywhere from, say, 3 to 9 months. Depends on the customer, depends on their level of confidence that our solution is truly superior. Going forward, we see this as a very promising business field, since in theory, all semiconductor fabs could potentially use our solution, in particular those that focus on high-end semiconductor nodes. If you're looking at the total available market, we have around 2,600 semiconductor fabs in the world, out of which right now 10 to 20% are focusing on higher level nodes, and our solution is required since it's delivering a higher level of actually purification compared to other solutions, which again is needed if you're looking at very, very low nodes and actually very, very low form factors. So overall, we expect already in the next year, plans have still to be made up completely, but a level in an area of around 1 million in the next fiscal year is definitely within reach.
All right. Thank you. We have 2 questions from Tim, and he's wondering, you were talking about the impact of tariffs, and you were specifically talking about the direct impact, and he wants to know if there could be a limited impact directly, but maybe a larger impact indirectly that you are afraid of or that you could see developing.
There's certainly a potential indirect effect that may hit us, and we consider uncertainty and deferred investment decisions or declines in market or direct hits to some of our key customers, which we consider an indirect effect, to have potentially an effect on our business. Nevertheless, that is something which we cannot directly influence. We are in close cooperation with our customers. And whenever it comes down, and I alluded to that, our solutions are typically customized and customer specific. So any change, call it a moderate change in price, actually in pricing, we consider that this could be absorbed. We see that in the recent exchange rate developments, especially for US customers. We're not seeing any impact on that, but indirect effects, uncertainty in the market, general decline in business activity on a global scale, we are certainly not immune against something that potentially hits almost all market players.
Understood. Another question from Tim is regarding the automotive industry, and you've talked about an expectation that you have regarding normalization going forward, and he is talking about indications from Infineon that indicate an expectation of a rebound in the automotive industry and industrial as well, heading into Q2 2025. And that's partially driven by normalization of inventory levels. So he's wondering, are you also seeing signs of recovery in underlying demand as customers' inventories deplete? Or do you experience this rebound rather with a lag to the traditional suppliers?
There is a lag, albeit it's not very big. So since you actually mentioned Infineon as a major supplier to the automotive industry, whenever it comes to Infineon's need or the need of the automotive industry to become supplied by Infineon chips, typically 1, maximum 2 quarters later, these sensors or components are being used in the car, where then adhesive from our group will be actually used. So we There may be a lag by about a quarter, maximum 2, but generally it's not too big that we see that. Generally, we start to see signs of recovery in this market already.
Okay, so you are seeing signs of recovery in this market already.
We start to see signs of recovery, yes.
That's good. Thank you. Once again, in case you want to ask a question, please feel free to use the chat box and we will address them with management. In the meantime, you guide for revenues and EBITDA for 2024, 2025. I would assume roughly this translates into break even or better on a net earnings level, correct?
Yes, break even, roughly break even, a slight plus.
Okay. Keeping this improvement in mind through the P&L and looking at 52% equity ratio that you just showed on a previous slide, would you consider paying dividends again at some point? Is there a dividend policy that you have in place? Obviously, you are growing again. Maybe you have usage for funds that is more important than distributing cash to shareholders. Is there something that you have in mind, and could you give us some guidance on that, or at least some color on dividends?
We gave some color on dividend payments in the past calls, also in previous events. For the next couple of years, we do not see that any dividend payment is realistic. First of all, it's about a turnaround of the company, which we start to see. We are growing in major markets, as I said, in disinfection, also for industrial applications for the curing industry. We want to grow in the adhesive segment. Whenever growth stabilizes and we are back on track on a solid and profitable growth path, we are always looking for creating the best value for the company, for our shareholders. And that includes, certainly among them are various options like dividends going forwards, but also inorganic M&A transactions that could help to grow the business at a faster pace and on a stronger level. All options are on the table, but for the time being, for the next couple of years, we do not foresee a potential for a dividend payment.
Understood. Fair enough. I've got one more follow-up question from Tim regarding I would assume the tariff situation, and he's asking as a follow-up to what he previously heard. You obviously have not yet observed any signs of hesitation or delays in purchasing decisions from your customers yet. I think you did say that there was a little hesitation maybe, but could you elaborate on that?
I can elaborate on that a bit. We were talking about certain industries. Certainly the automotive industry is one of the industry where we experience delayed or deferred or even canceled joint projects that to some extent have to do with the current tariff situations. We also see, since we alluded to projects in the pipeline, we're looking at a solid and healthy project pipeline. Nevertheless, we also see that some of the projects that should have come into realization at an earlier stage experience some sort of delay, which is typically related to the current geopolitical uncertainties, among which tariffs are one. So I'm not saying we're not completely immune against that. We are happy to see that despite all these adversary effects, we're experiencing growth for curing solutions, especially for industrial applications. We would probably see some even faster growth if all lights geopolitically were on green, which currently is not necessarily the case in all instances.
Right. I've got one more question regarding the EBIT margin, and basically it is addressing that in the history, you had EBIT margins that were around 20%. It's a while back, but do you see 20% margins realistic again in the medium-term time frame, or what margins are targets for you to reach maybe over the next 5 to 10 years again?
To answer this question, we actually want to refer to our statements in the Capital Markets Day that we gave in January this year, where we laid out our growth plan until 2030, shown a strong growth in all three business units, among which adhesive systems should see the strongest growth, and disinfection also a very considerable growth, curing a growth, albeit to a lesser extent. And we anticipate that the EBITDA margin overall for the company by the year 2030 should be above 20% for sure. And you may look up these numbers that we gave you. We're still on this track. We are steering the company towards this growth plan, and that's what we expect to see.
Good to hear. Thank you. We're out of questions, so I'm just going to look at the audience one more time. In case you are hesitant of asking questions in English, you can, of course, also post them in German, and I will translate them. Not an issue. But in case there are not any questions left or no more questions to be asked, I will close this call shortly, but still want to give everybody the opportunity to ask a question in case they haven't done yet. I guess there are no more questions. So I would like to thank, of course, everybody who participated in this call. I would like to thank Dr. Arendt and Mr. Stark for their insights and their presentation. I'm sure if there are any additional questions that might pop up at a later time, you can always reach the IR department, Mr. Weinert, with your questions. I wish you all a great afternoon, and thank you for attending Dr. Hönle's earnings call for the first half of 2024-2025. Thank you.